Morning all, it's Monday the 15th of May. Hope you all had a good weekend. Let's have a catch up then with some of the major news from the weekend and how the charts are kind of sitting this morning to get the week underway. And I guess just taking a bit of a review from the end of last week, where on Friday had a bit of a breakdown in US economic data to some degree, that being kind of back end of last week. The PPI numbers, the CPI numbers on Friday, Thursday and Friday, were a touch weaker than expected. US retail sales as well, a little bit disappointing, despite Michigan sentiment holding up, but did create some dollar weakness at the time. So just looking at the euro dollar chart here, reflective of that big pop higher that we saw on Friday, which has really added to the gains that have been seen since Macron won that first round of the French elections. Obviously the point of when he actually won on the second round was very much factored into the market, and we saw a bit of profit taking on those euro longs at that point. But here we are, having recovered back up in towards, well, about 50 pip range in the futures of that 110 handle again on the upside. Obviously one thing to keep an eye on is the closer we get up towards the higher end of this range, which we kind of would define year-to-date highs, would be to keep an eye on ECB commentary. Tend to get source comments hit the wires, indicative of trying to just indirectly, I'd say, control too much euro appreciation by talking it down and sounding less hawkish on things like the inflation issue, in terms of managing that price point. The one thing though that sticks out this morning is crude oil. Just been talking, well, as I've just been talking in the first few minutes here, just seeing a slight edge above $49. So looking at a 15-minute candlestick here, you can see a really powerful move that's been seen in the overnight session. Came pretty early hours of the morning, kind of 3:30ish type time in the morning. And then as Europe has come in, you've seen another quite big lift on the upside. This is quite often the case that you see if there is big news, you kind of get the Asia reaction to it. And then as Europe comes in, the volumes pick up, people start looking through the news as they come in, and then you get another kind of wave of buying. Why has this happened? Well, I've sent the research out to you this morning. You've probably read the headlines by now, but just to recap, Saudi Arabia and Russia. So a couple of comments from overnight. The energy ministers from Saudi Arabia and Russia said they were backed extending an OPEC-led agreement to cut output until March of 2018. So this is more just confirmation really of some of the sources which were circulating at the end of last week. If you remember, the talk had shifted from a 6-month extension to now a 9-month extension. And the key thing here being that the two most influential members by size of production seemingly are on board and singing from the same hymn sheet. So Saudi energy minister and his Russian counterpart met today in Beijing and discussed oil output policy. Russia being the world's biggest oil producer, Saudi the biggest exporter. So the two ministers in a joint statement said they agreed to do, and this is, for any of you who've been in the market long enough, a bit of an infamous phrase coined by ECB President Mario Draghi at the depth of the European sovereign crisis. This was the words that he said, whatever it takes. That was quite a defining moment in, as I say, the European debt crisis, which caused a dramatic turnaround and recovery at that point. It kind of marked the low point, because people then were of the perception that by coining this phrase, the ECB quite literally would do whatever it takes. And so that's being said now in the energy market this morning. The markets seem to be liking what they're hearing as far as this being an escalation of what OPEC are willing to do, and non-OPEC names. Of course, they have a meeting scheduled May 25th where they're looking to ratify this agreement going forward. But certainly pretty strong recovery from what had been now. If we look at this on a percentage, just give me 1 second, from where we were, that low point to where we are, you know, quite an impressive 12% rally they've managed to pull out the bag here. Don't forget, they've actually done absolutely nothing at this point all they're doing is being compliant to the existing agreement, which is due to expire next month. But this 12% rally is all on the back of the promise and prospects of further cuts to come. The deal being that this would be a longer duration than what some were factoring in, and hence much larger, broader cuts are now coming into play. So $49 handle is being recaptured here on the upside. A bit of further buying coming as Europe's entered the market this morning, but certainly if that continues, that might well likely lend its hand to some support for the equity market. More probably stateside, you tend to see that correlation with the S&P and the energy sector. The S&P future tracking just slightly positive this morning. Looking at the other indices, you have had a bit of a gap up this morning in the futures market. Pretty much test right to in the DAX that previous high that we printed back on the 5th, so it would have been last Friday, and then we've had some, again, bit of profit taking. It's gapped lower right the way down pretty much to the tick to the highs that we're seeing where we closed on Friday's session. So you can see that playing out. The gap up just above, or really on the charts, pulls back right down to the kind of low, just where we were on those highs on Friday. Equity-wise news, not really too much to speak of. Couple of earnings reports. Just in context, you've had, looking at some percentage movers, it's mainly FTSE-based. Tullow Oil up 2%, BHP Billiton and similar margin. German stock, BASF, just trying to get the measurement on that. Not particularly clear at this point in time, but they did have their earnings this morning. But DAX, a brief record high this morning, likely this commodity play also just helping a little bit, just with overall equity sentiment. As such, with equity slightly positive, gold just seeing a bit of downside now as I'm speaking. I guess keep in mind, if we look a little bit longer dated, we've had a pretty decent upward trend materialize since the middle part of last week. Recovery from around kind of 12.15 type level up to around 12.30. So maybe a bit of this equity strength just pushing gold a little lower here, eradicating some of the gains that were seen overnight in the Asian session. Talking of the Asian session, a few things to be aware of. Firstly, from an economic data point of view, a few things out of China. So at the weekend you had the retail sales, fixed asset investment and industrial production numbers all coming out, and all were a little bit weaker than expected. But overall I'd say the market is a bit disinterested of this economic data coming out of China, at least for the time being. The misses against the consensus estimate were marginal at best. But you can still see, tracking at fairly comfortably high levels. Retail sales growing at 10.7% year on year in April. But these were slight slowdowns. Looking at the fixed asset investment number, still reflective of a fairly healthy situation where the state kind of level of intervention is steadying off, but well off the kind of crisis levels that we saw during the height of the China volatility at the beginning of 2016. Private investment, although not as high, is still up at around more elevated levels that were seen kicking in towards the end of last year. So nothing to really get too concerned about, I'd say, from this data coming out of China. The one thing that I'd say, though, that has maybe drawn a few more question marks over the geopolitical tensions, which seemingly had dissipated, have now re-emerged to some degree, and that's because North Korea have essentially done another test firing of a missile. So they boasted on Monday this morning of a new rocket that could carry a large size heavy nuclear warhead over long distances, with analysts estimating it could reach US military forces on the island of Guam. So this certainly hasn't gone away. The official Korean Central News Agency, otherwise known as the KCNA, have been talking about Kim Jong-un witnessed on Sunday's launch of a new ground-to-ground medium long-range strategic ballistic rocket. So it puts a little bit of this back into perspective. As I say, it's kind of had gone away to some degree. It comes as well as the South Korea on the peninsula have voted in a new leadership just last week. So it's a bit of a test, I'd say, of their political will on the situation. So not really much impact on the market, but something just to be aware of and to monitor going forward, I would say. Another headline from the weekend that you should be aware of, we were talking about this late on Friday, was about there had been a string of regional level elections ongoing in Germany. These had been a little bit of a focal point because of the popularity of which Merkel was coming under increasing pressure following some of the terror attacks, which led into some criticism over Germany's immigration policies. This, of course, comes on the backdrop of taxpayers being unhappy about sovereign bailouts of southern European states, which has been accumulating over recent years. So Merkel had been under some pressure, but she had bounced back in two prior essentially regional elections, and so one was on particular focus at the weekend on Sunday. This was North Rhine-Westphalia, which is the most populous region of Germany, and it was supposed to be quite a close run race, but essentially Merkel's CDU party took home 33% of the votes. If I scroll down, this was in comparison to essentially 26 that she tabled last time in 2012. The incumbent SPD, run by Martin Schulz, who's the biggest rival seen to be for Chancellor Merkel, they took 31%. They previously had 39%. If you actually break it down, the anti-immigration AfD, so if you were thinking that was a real political kind of sticking point, they had been running as high as 11% in opinion polls in the region. They were aiming for 10%. They secured just 7%. So, you know, you're getting quite a clear reflection of kind of political movement back towards the kind of norm. Maybe, you know, kind of thinking about this when I was reading some of the reports this morning, maybe just in the new realm of Donald Trump and what it's meant for kind of global partnerships, particularly on a military front, and what it's meant for geopolitics globally. Are people in Germany actually thinking that despite some anger over the European situation and Germany's contribution to it, is the fact that actually people want Merkel in place because they see great continuity in her and they see her as a strong figure that can stand up in a world where you have Donald Trump, Vladimir Putin, Kim Jong-un and so on, these quite notable figures that you need someone of reflective of strength, and Merkel would certainly be a character of that sort. So quite interested to see then that the final of these regional elections, which obviously will act as a sentiment or a lead indicator for the German federal elections, which we'll get in September of this year, things are looking much better now for Merkel than what they were just several months ago. How's this translated on the charts? Well, this is a much more bigger, I'd say, broader macro play than something that you're going to get an immediate knee-jerk reaction. I mean, looking at the euro this morning, we're kind of still holding on to the gains that were seen, as discussed earlier, from the weakening of the dollar post some of the slightly softer data that we had at the end of last week. So upside from here, I guess if we're looking on the week range, 110's the kind of more logical target. You've also got those initial relief rally highs, first round French election, Macron-Le Pen runoff. We got up to 109.78.5 is probably the next stop from here on the upside, should we continue to move any higher as we go through the session and this week. Okay. Quick look at cable. Obviously there's still ongoing press. It's kind of Starting to pick up a little bit ahead of June 8th. We've got the general election forthcoming. This was the latest YouGov survey from yesterday, voting intention in Westminster, of that conducted on the 11th and 12th. Still very much so a strong lead to the Conservative Party. I think one of the things, though, that I've noticed in the divergence between the press and what I'm seeing on social media, the press, I mean, it all seems pretty logical, talking about really how many seats, and technically there was one talking about how the Tories could actually capture as much as 200. There was a piece in the Sky News which I tweeted earlier this weekend. However, on social media, you tend to be getting a complete opposite. I don't know about you guys, what you're getting on your kind of Twitter feeds and your Facebook feeds and so on, but certainly is a bit of a backlash against the Tories and talking up this Labour game, irrespective of people's criticisms of the leadership under Jeremy Corbyn. Quite interested to see that divergence, obviously coming amid a lot of this talk about the parties at play that may well influence social media kind of sentiment. So definitely not, I'd say, something that's moving markets right now. Again, this is gonna, I'd say, escalate in the priority of what is driving the market as we get closer in toward the actual voting day. But if you remember, there was a chart I showed you last week where kind of option strategies kind of for volatility are pretty reflective of minimal risk around this being anything other than a kind of runaway victory for the Tories. It's just more of a matter of by how much and the margin. Looking at cable this morning, I've got identified here, I think this was, what, Thursday of last week, we had that industrial manufacturing production was pretty weak. Then you had the Bank of England Super Thursday. That was when we had the slightly dovish interpretation of the fact the inflation forecast, they were brought forward to peak earlier but then to drop off more sharply going from 2018-2019 in the longer run. We've pretty much recovered that entire move, so where any weakness that was seen there back up this morning, highs testing up at around that R2, providing a bit of resistance thus far, 129.45. I guess if we're looking slightly longer dated, looking at the range that we've really formed since the snap election was called, that was that big rally that we had back on the 18th of April. We're kind of right in the middle of that range, 128.46 defining the low that we're seeing on the 4th, 130 handle is basically the upside, and we're trading about 50 cents away from that at the moment. So cable, slightly longer term, not looking too interesting really around this point. But if we look ahead on the calendar, it is fairly busy for the UK in terms of getting a read into the economic conditions at the moment. So looking at the calendar for today, you've already had the Chinese data. We'll get the New York Empire State Manufacturing. Will be something that traders will look at later on in the US session, but it'd be interesting to see whether or not we start to see some of these economic indicators from the US start to fade slightly as some of the steam runs out from this kind of built-up play on the Trump trade. Sentiment-wise, Michigan was holding up, but it's to see whether this hard data can follow suit from the soft numbers that we've been seeing. But pretty quiet overall on today's session. Tuesday, things though, as I say, for the UK start to liven up. And actually, if you're trading cable, it might be Tuesday is a much better day overall, because it might get sparked into life by the fact that you've got the latest inflation readings coming out. And if I was reading the press right at the weekend, essentially you've had, well, let me just bring up UK inflation. It'll make a bit more sense of what we're looking at. So we had a bit of a surprise last month because we had a big jump up at the beginning of the year. January to February, we rose in the year-on-year reading from 1.8 to 2.3%. So we busted through the Bank of England's target of 2%. What this led to then was a big ramp up short term of the premise of people pricing in an interest rate hike from the Bank of England going forward. However, then the month later, the March reading, we basically leveled off. And although this marks the highest rate since September 2013, it actually put to rest this fairly consistent and steady incline that we had been seeing. However, I think the consensus estimate is 2.6 for the reading that's coming out on Tuesday. So a return back to this pattern that we're familiar with. If you start looking where 2.6, the last time we were at that kind of level, you'd kind of have to go back to really, you're looking at pre-2014. So it will be a multi-year high, certainly, if we print up at that level in terms of how high inflation is. And certainly this is something which we've talked about a lot. How is this going to start to impact household incomes further? And how does that then start to be to the detriment of the performance of the UK economy? So CPI data from the UK on Tuesday will be key. Alongside this, you get the German ZW economic sentiment. We'll keep an eye on that as well with some interest. And then later on in the evening, as regular, the API crude oil inventories, which could be interesting to watch given the sizable drawdowns we've held, which has also been an added catalyst for this quite sharp 12% rebound that we've had from those lows when we were trading down at around 44. The combination of those biggest drawdowns since 2016 with the promise of this now extension of 9 months helping crude get back above to this $49 handle this morning. Going further through the week, Wednesday you then get the unemployment rate for the UK. Inflation rate out of Europe will also be interesting, as well as always short-term volatility surrounding the crude oil inventory situation. As you can see though, pretty quiet from a US economic data point of view. It's really the emphasis on the UK market. You get retail sales, so really at Tuesday will be quite telling to then see how this is feeding through into Thursday to people's ability to spend. With savings rates dropping quite sharply, with wages not increasing at the pace of inflation, are people starting to rein in their purchase behaviour? We'll be interested to see that. Then Friday, again, pretty quiet overall. A slew of ECB speakers, though, kind of bookends the end of the week, Thursday and Friday. You got Mersch, Lautenschlager, Draghi, Prayet, Coa, Constancio, pretty much the full team, if you like, of the more regular notable speakers, or more influential, so to speak. So this will be obviously key to see. People are starting to question the timing of when the ECB could hint towards turning more hawkish, which current consensus estimate is around June. Not June that they'll take action, June when they'll start to change their wordplay to indicate changes further into the year. So fairly spread week. Not one day that really jumps out. Speaker-wise, it kind of a bit more emphasis towards the back end of the week. UK data Tuesday and Thursday will be interesting for FX traders for sure. Okay, guys, gonna leave it at that. So, a fairly, there's a few headlines to be aware of from the weekend, but nothing that's really translated directly into massive market movement other than the oil price, which is probably the standout. So Russia and Saudi seemingly on board to take further action, back up to a $49 handle. It seems to have helped negate any negativity from slight miss on some Chinese data over the weekend. From China, though, there was also a couple of reports about the government talking about further plans to stimulate the economy from a fiscal side of things. That's probably helped as well. Currency-wise, the dollar is, again, a little bit softer, albeit just slightly, but helping support both major pairs in the currency market. And the DAX at the moment having briefly touched record high levels again before coming back down at the cash open to find some support around the futures Friday high. Okay, for the guys going into today, important day, because the guys in stage 2 of the career program transitioning into live markets today. So good luck. Don't feel any pressure to want to jump in just for the sake of it, but there's not too much great deal going on the calendar specifically today. So I guess just identifying good solid technical plays might be the most prudent course of action. And good luck. I'll be in the chat room, as will Vas, so any help we can provide, always happy to do so. Okay, have a good session, guys.